Okay, well, good morning, everybody, and thank you for joining our webinar this morning. My name is Craig Butler. I'm Head of Wealth Management at Thomas Carroll IFA. For those of you that may not have come across us previously, we provide wealth management advice to both personal and corporate clients, as well as employee benefits advice. Today's webinar is part of a series of webinars that we've been running over the summer. Many of the recordings of previous webinars sit on our website, and I certainly encourage you to have a look at those if you get an opportunity. We're planning on running further webinars through the summer and autumn, and we'd really love to hear from you about subjects that would be of interest to you. So if there is something that you'd like to hear from us about, please do let us know via the Let's Chat facility on our website. So today we're going to talk to you about key person insurance. So let me tell you a little bit about our speaker today. Tom Bevan. Tom has been in the profession for 9 years and joined Thomas Carroll 2 years ago. Tom is our resident business and personal protection specialist and also works as an employee benefits consultant within our employee benefits team. So without further ado, let me hand you over to Mr. Bevan. Tom, thank you very much.
Thank you, Craig. Good morning, and thank you for taking the time out of your day to join me on this morning. This is part one of our business protection webinar series presented by Thomas Carroll Wealth Management. And we should be finished around 10 o'clock this morning. Our focus today is on safeguarding the most valuable asset in a business. It's people through key person protection. Looking ahead, we will be presenting part two of the series in October, which will be on shareholder protection. This will be in conjunction with law firm Harrison Clark Rickaby's. Before I move on, if you have any questions throughout the webinar, please send a message in the question box and I'll get back to you by midday. By the end of this webinar, my goal is to impart a clear understanding of the need for key person protection. Firstly, we will translate what business protection means and identify its various forms. Then focus on key person protection. What is it? Who is it for? And do you need it? Cost is important. Therefore, we will provide a guide and then an explanation on the tax position for premium and benefit. We will then conclude with a look at how key person protection combats COVID-19. In our profession, we see positive activity around employment benefits and pension schemes, especially with the introduction of auto-enrolment in recent years, and even staff protection in the form of group schemes. Yet, the business itself can be overlooked. But without the business, these simply wouldn't exist. So, business protection, what is it? Our starting point is to ask the questions we tend to avoid. What happens if the business owner or majority shareholder dies? What will the impact be on the business? Will the business even survive? Is there a business continuity plan? What external entities such as banks, creditors, debtors, and suppliers would be interested? What happens to the family? Are there loans in the business, and if so, to who? Commercial lenders or the director loan account? All these questions highlight the human risk within a business and the domino effect it creates if there aren't sufficient plans in place. The three pillars of business protection underpin the human risk to a business: key person protection, shareholder or partnership protection, and business loan protection. Business protection safeguards the human risk to a business. There are 4 types of business protection, as mentioned. So business loan, key person, shareholder or partnership, and relevant life. So the first 3, business loan, key person, share, protect the business. And then relevant life protects the family of an employee. These product titles are not transparent, so we focus on what they protect to make the product relatable and meaningful. Business loan protection is all about debt. Does the business have any debt, such as a commercial loan from the bank or a private investor? What happens to that debt if the business owner or key profit generating employee dies? If either were to die, business loan protection pays out a lump sum which can be used to pay off the debt. Key person protection is all about profits, which I will expand on shortly. Shareholder protection is all about ownership. What happens to the shares of a deceased shareholder? Can the surviving shareholders afford to purchase the shares from the deceased family? Will the deceased family take an active role in the business? On death of a shareholder, shareholder protection provides a lump sum to the surviving shareholders to purchase the shares from the deceased estate. As mentioned earlier, this will be covered in part 2 of our business protection webinar series in October. Then there is relevant life, which focuses on the family of the employees. The business ensures the life of an employee, and in the event of their death, the proceeds are paid out to the employee's beneficiaries. Business protection can provide the cash injection that could be the difference between its survival or demise. Many people think that arranging business protection is a lengthy, complicated process. In fact, the principles are very similar to most other types of protection. The main difference is business protection generally involves higher sums assured. So we provided the background then to what business protection is. Now we're going to look at specifically key person protection. So key person protection is a life insurance policy written on the life of a key person and owned by the business. Critical illness cover can also be added to the policy at outset. The business pays the premiums, and in the event of death or critical illness, the business receives the benefit. The policy payment can be used to cover the business debts, profits, and recruitment of new staff. There are numerous decisions to make before the policy is set up, and 2 key factors are the type of cover and for how much. Life cover provides a lump sum in the event of death. This is normally escalated in the event of terminal illness. Therefore, if death is within 12 months, in addition to life cover, you can insure against the diagnosis of a specified critical illness. Approximately 85% of people who die have suffered prior to death with either cancer, stroke, or heart attack. More and more people are surviving for longer periods than in the past, and the business could become financially vulnerable during a period of recovery. For this reason, more and more key person policies are set up to include critical illness cover. However, it's important to note that there are variances between providers as to what critical illnesses are covered. There is not one size fits all policy. When deciding the amount, there are no hard or fast rules when assessing the financial value of a key person. Each key person must be dealt with on their own merits. The 2 most common methods to calculate the sum assured are multiple of profits and multiple of salary. As one of the main objectives of key person cover is to protect the profitability of the business, looking at profit generated by the key employee is a sensible step. The normal multiples are 2 times gross profit or 5 times net profit. However, higher multiples may be justified by a rapidly expanding business. Then looking at the actual salary, a multiple of salary, multiple of gross salary to be correct, is including benefits in kind. This can give a useful guide to the amount needed to recruit a replacement. This can be up to 10 times gross salary. There are also additional considerations, such as how long the policy will run for, whether there is a renewable option. So a renewable option is when the actual cover can be extended without the need for medical underwriting. That's when it reaches the end of its term. You have the option to extend that cover. Is it a single payout or on both events? Should the sum assured increase over time? Is it based on level or reviewable premiums? Clearly, there's a lot to consider, and it is important that the policy is set up in the correct way to meet the needs of the business. Therefore, it is important that if the business is unsure, advice is sought. Okay, so we've got an idea of what key person protection is. Now we're actually going to look at who is a key person. Henry Ford, founder of the Ford Motor Company, said, "You can take my factories, blow up my buildings, but give me my people and I will build my business right up again." He knew the value of his employees. Undoubtedly, a lot has changed since his death in 1947, with technology leading the way through companies such as Amazon and Facebook. Technology is a valuable asset to business, but as the global coronavirus pandemic has reinforced, people are integral to the success of a business. Without its people, most businesses would eventually fail. The success of almost all medium and medium-sized businesses is dependent on a few people who make a significant contribution. These key people can include the owners, senior directors, salespeople, production managers, research and development staff, or other people with specialist skills or knowledge. Key people are those that, if lost, would directly or indirectly cause a financial issue for the business, such as loss of revenue and profits, cost of recruiting new staff to replace the skills lost, loss of client and supplier confidence, rebuilding client-based confidence, as well as the personal elements, such as detailed knowledge of the business's processes and systems. The loss of just one person in a small business can have a massive impact, creating increased workloads, loss of skills, potential loss of profits, and in extreme cases, the failure of a business. So we've identified who is a key person. So now we need to look a bit at the market, and is there actually a need? Is there an uptake on key person protection? So since 2015, Legal & General, a provider who is on our recommended panel, have been producing an annual document titled State of the Nation's SMEs Report, which focuses on business protection. The document provides great insight into the market and the risks businesses face. Legal & General spoke to around 800 businesses in the UK, from limited companies and sole traders to partnerships and limited liability partnerships. Sectors include health, retail, financial services, public sector, IT, and construction. The businesses they spoke to also varied in stages of their development, as well as being a mixture of solely male-owned, female-owned, or with a combination. So essentially, they're covering the whole of the market here. So it's a good exercise and a good research tool for ourselves. Almost all businesses, 99% to be precise, had at least one key person, and almost 4 in 10, 38%, said they had 3 or more key people. Now, I have a poll for you. So, based on Legal & General's research, what percentage of businesses have a protection policy in place for their key people? Okay, so thanks for the answers. So we had an 18%, 67% confirmed that as an answer, and at 36%, 33% of you confirmed that as an answer. So you're in the right area. So it's 18% have insurance in place to cover these people. Legal & General stated that once businesses understood the consequences of losing someone important, over half did not think that the business would survive the next 12 months. Others said that the business would probably survive, but would struggle to find a replacement person. The rest said that there would be some financial uncertainty. Legal & General highlighted the reality that many businesses had not considered the financial strain they could be put under if they suffered the death or critical illness of an owner or key member of staff. The research revealed that in their perception of what could happen has never really been considered in depth. No doubt businesses consider the risks they face and will often have insurance for various events on property and fleet, for example. However, half thought an owner suffering a critical illness and unable to work would be one of the top 3 risks for a business, with almost 2/3 saying the death of an owner would be their #1 risk to their business future. The research proved that there was a lack of awareness around opposed to an active decision against key person protection. Our role as the advisor is to ensure that businesses are aware of the people risk so they can make an informed decision whether to mitigate against the exposure or not. Legal & General's research identified a misconception around the cost of key person protection. Business owners estimated, on average, that the premium was 3 times the actual cost, and 80% estimated the premium was higher than the real cost. With this in mind, I have provided quotes obtained as of yesterday. The 2 quotes are based on the same individual, who is 45 years old, non-smoking female, with no medical issues. The monthly premium is to remain level throughout the 5-year term, with the option to renew for a further 5 years without medical underwriting. This is the renewable option. For life cover, only on the key person, with a level sum assured of £500,000, the premium is £35.86 a month. For life cover, for life or critical illness cover, with a level sum assured of £250,000, the premium is £123.75. Please note, these are quotes for guide purposes and they're not guaranteed. What is apparent is the low cost of pure life cover and the difference in adding critical illness. Critical illness costs around 5 to 6 times the price of life cover, which reflects the risk of being seriously ill compared to death. We are more likely to be ill than to die during our working lifetime, and as an example, half of all heart attacks in the UK are repeat attacks. Each key person protection case follows an individual application process which involves medical underwriting. The cost of the key person protection varies on the number of factors based on the key person, the life assured. The older, the higher the cost. Smoking roughly doubles the premium, and any potentially dangerous hobbies such as scuba diving, rock climbing, flying planes will be of interest depending on how frequent it is and to what level. Health is an important factor, and common conditions such as high blood pressure, high BMI, and diabetes can have a big impact. But other conditions could be taken into consideration. For example, an ongoing back pain could develop and prevent the key person working altogether. In some cases, a pre-existing condition may even prevent the key person from taking out some types of policy. Depending on the circumstances, insurers can load the premium, anything from 25% to 50%, up to 200% to 300%. Or they can apply an exclusion. For example, the key person has a history of back problems, so they apply a spine exclusion, but will not change the premiums. They will not add a loading, but they will simply exclude the condition. In more extreme cases, an insurer may decline or postpone cover. More serious conditions such as cancer or past heart attacks will not mean cover is necessarily impossible, but it is likely to cost more. The benefit of obtaining advice is that if there are underwriting concerns, advisors will consult with various providers to obtain an early indication before an application is completed. This saves time, money, and ensures the business receives the most suitable key person solution. Okay, so we've covered what key person protection is, who it's for, and is it needed. Now we've also touched on the actual cost, so you get an idea of what we're dealing with. So the next stage is actually to look at the tax implications of key person protection cover. So there is no direct legislation regarding the tax treatment of premiums and benefits. The decision depends on the facts of the case and rests with HMRC. The business should contact its local inspector of taxes to check whether tax relief is available in each case. This is usually managed by the company accountant. As a general guide, under the Sir John Anderson rules set out in 1944. So Sir John Anderson was the Chancellor of the Exchequer at that time. The premiums paid will be allowed as a business expense for corporation tax purposes, provided that the only relationship between the proposer, so the business, and the life assured, the key person, is that of employer and employee. The plan is designed to cover the loss of profits only. The term of the policy is reasonable. It shouldn't be more than the key person's usefulness to the company. And 5 years is a general guide. The employee does not hold a significant shareholding. Less than 5% is probably insignificant. Bear in mind, tax relief will not be available if the policy is effected as a security for a loan. Where the premiums are allowed as a business expense, then the benefits will be liable to tax as a trading receipt. But if the premiums are not eligible for tax relief, the policy proceeds will usually escape tax. The tax relief on premiums is not optional. If tax relief is allowed but not claimed, this does not mean that the sum assured will be tax-free. It is therefore very important that the effects of taxation should be considered when setting up the sum assured on the key person. Okay, so we provided the ins and outs of a key person protection policy there. So what it is, who it's for, is it needed, the cost, and the tax implications of that policy. So now we're looking a bit more at current times and what we're going through currently. So obviously dealing with COVID-19. COVID-19, we've been asked the question, will a key person life cover policy pay out in the event of death? The answer is yes. So now it's time for a second poll. Question is, if you test positive for COVID-19, will a key person critical illness policy pay out? Yes or no? So a couple of seconds on that one. Brilliant. Okay, so we had 25% answered yes and 75% answered no. And the answer is, in terms of critical illness, so on the face of it, it is no. So in terms of critical illness, coronavirus is not a specified critical illness. The good news is that most people who contract the illness go on to make a full recovery. In some cases, people will die as a result, and in such circumstances, the life insurance, if included on the policy, will pay out. But if the key person has complications from the virus that lead to conditions that are included in the policy, such as kidney, liver, heart, or respiratory failure, the claim will be paid if it meets the definition in the policy terms and conditions. In terms of application, providers have added COVID-19 specific questions. In the event that the key person has tested positive for COVID-19, an initial postponement period will apply. After a full recovery has been made and they have returned to their normal activities, in general, the following terms will be offered. Life cover, standard rates after a month. Critical illness, standard rates after 3 months. In the event that the key person has come into contact with someone who has tested positive for COVID-19 and been advised to self-isolate, an initial postponement period will apply. After a full recovery has been made and they've returned to their normal activities, life cover will be offered on standard rates after a month. Critical illness will be offered standard rates after a month in general. If the key person is self-isolating due to symptoms that they are experiencing, then this will need to be disclosed on the application form. If the application has been completed but the key person is still being underwritten, or if they have been accepted but the policy is not yet commenced, then they must inform the provider under the duty to take reasonable care relating to any change in health prior to the policy starting. In these circumstances where the key person has been advised to self-isolate due to experiencing symptoms, the application will be postponed, typically for a month. After a full recovery for life cover, or for 3 months after a full recovery for critical illness. If they're applying for life cover with or without critical illness cover and are self-isolating due to someone else in their household experiencing symptoms, their application will be postponed for 1 month after their self-isolation has been completed. Okay, so that brings a discussion around key person protection and how it's being treated currently in the market to a close. I just want to touch a bit on Thomas Carroll Wealth Management, following on from what Craig opened with, and how we can help businesses with their protection needs. We are a chartered financial planning firm, which is seen as the kite mark for trust and quality. This ensures that the business receives the highest standards of advice available. Our independence ensures that we will always have the business interests at heart. Rest assured that our advice is objective and impartial in all areas that we advise. Our advice process is displayed on the slide. So we begin with the fact find, and which which is the get to know your client stage. Then we establish an understanding of the business protection position and its needs, which incorporates our data gathering process. So we look at actually the business in and out, assess where the shortfalls are there. So a client may come to us and say, I need key person protection. That's a good starting point, but we like to evaluate the whole position of the business to look at any other shortfalls, not just looking to plug one gap, but looking to actually provide the holistic approach in terms of advice. So once we've achieved the fact finding and data gathering stage, we then conduct our analysis and research, which then leads to our recommendation. We then implement the solution and then review when necessary on an ongoing basis. So this can be annually, but more often than not, if we're looking at, say, policies can range 2 to 5 years on average. When we're nearing the end of a term, that's when we probably touch base again, just to review the business, see where they are and whether they want to extend or take out a new policy, a different type of cover. If a business identifies a need for protection, it is important that it satisfies that need with the right solution. As an experienced financial advice firm, we are all about listening to the business needs, providing the suitable advice, and ultimately achieving the right solution. Okay, so thank you very much for your time this morning. If you have any more questions, please can you email them to hello@thomas-carroll.co.uk and I'll get back to you by midday. So thank you very much for joining me and have a good day.